Hi, and welcome to another edition of CMS Forex News. I'm Christina Robinson, and today is Thursday, April 17, 2008. The euro-dollar pair fell in favor of the dollar after Luxembourg Finance Minister Juncker said that the euro's recent advance against the dollar isn't desirable. He also stressed that the markets may have misunderstood the potential for joint intervention by central banks from the recent G7 meeting. This caused some knee-jerk dollar buying, though the euro rebounded pretty swiftly after hitting support near 1.5850. The euro fell against the pound as well, easing off its all-time high by around 100 pips. The pound gained on speculation that the Bank of England will try to ease money market conditions, boosting investor sentiments for the higher-yielding pound. Against the dollar, the pound was up 200 pips from its daily low as U.S. data was disappointing today. The pair reached 1.99 around noontime, but was trading below that as of 1:45 p.m. Eastern Time. The pound gained sharply on the yen as this pair reflects carry trade sentiments, and the speculation helped it rally 330 pips from session lows yesterday evening. The pair has not been at this level since last Monday. Turning to some fundamental news, the pace of annual retail sales in Switzerland rose by 3.3%, more than expected. A strong labor market is supporting consumer spending. However, food amounted for a big portion of sales in the form of price increases. A second release, the ZEW Expectations Index for April, remained marred against March's levels. Expectations have been for a better showing. The dollar franc hit its low for the day following the sales data, but rose in the dollar's favor after the unfavorable ZEW figure. The dollar rallied 120 pips to hit resistance from yesterday's highs, and then proceeded to pare some of its losses at the New York Open in response to U.S. jobless claims. Initial claims for unemployment rose 17,000 last week to a pace of 372,000. The total number of people collecting benefits rose to a four-year high at 2.984 million. The numbers were slightly larger than expected as industries tied to housing and financial industries weaken, and other firms remain reluctant to hire more as the U.S. experiences recessionary conditions. Manufacturing in the Philly Fed region deteriorated in March. The manufacturing index fell to negative 24.9 as all of the survey's categories declined compared to March. In a third release, the Conference Board leading index rose 0.1% in March, recovering from February's negative 0.3% reading. The dollar gained on the yen overnight, climbing near the 102.70 level. At the New York Open, the weaker U.S. news helped the yen pare some of its losses. U.S. stocks were mixed, but mainly stayed in negative territory. The dollar managed to recover as New York session entered the afternoon. By 2:30 p.m., the pair was trading near 102.5, 75 pips higher than the session's open. In Canada, consumer inflation came in tamer than expected in March. On the month, prices rose 0.4%, matching February. However, core prices fell sharply from 0.5% to 0.2%. On the year, inflation cooled to 1.4%, matching expectations. The annual core rate went even lower than forecasts, falling to 1.3%. The data gives the Bank of Canada, which meets next week, more leeway in cutting rates in order to prop up economic growth. The news set off an increase in volatility in the U.S. dollar-Canadian dollar pair. First, the pair broke up above 1.0050, then retreated back down below parity, and then shot up 140 pips as the markets digested the data. By 2:20 p.m. Eastern Time, the pair was trading about 100 pips higher than its session open. Tonight, Australia releases data on import prices for the first quarter. Japan follows with a report on household confidence. Overnight, Germany will reveal producer prices, while the UK unveils money supply figures and government borrowing. Tomorrow, there are no releases from the U.S. Canada will post wholesale sales data and its leading index for March. And that completes today's news. Join us again tomorrow as we wrap up the week right here at CMSFX.com.